Hello everyone. So once again, you are welcome. You are very welcome to my YouTube channel, Joshua the Disciplined Trader. So what I do here is if this is your first time on my channel, I document my forex journey to become a professional and a profitable trader. And also the latest update is that I'm on a challenge of taking 100 trades using one strategy and one entry model with a disciplined mindset. So what you are seeing here, I guess you already know, I trade the alchemist strategy, which is the combination of CRT, Malaysian support and resistance, and advanced SMC. Sometimes I do use ICT, but it's not I don't too use ICT frequently, but the main concept I use is the CRT, Malaysia support and resistance, and most importantly advanced SMC. So without wasting much of your time, I'll quickly go to the daily time frame and show you how to trade this strategy using the alchemy strategy. So we will quickly go to the daily time frame and map out our daily bias, which is our direction, and come to the 4 hour and look for a break of structure. Then we look for our entry on the lower time frame. So coming to the daily time frame. So okay, we are on the daily time frame. So let me quickly clean up this. So we just start it all over again. So this trade have been taken already. So coming to the daily time frame, the first thing you want to do is to identify the trend, because the trend is always your friend. Now the first trade I took, which I will explain right now, is it's a very simple one, and I actually spotted it on the daily time frame. It was a no stress setup. So here is how it is. Okay, before we dive into this strategy completely, the first thing we want to do is the daily time frame. The daily time frame, what we want to see on the daily time frame is the trend. Let me write it down for you guys to see. Please bear with me, this video is going to take a little bit long. Okay, so the first thing we will likely to look out for is the trend. Okay, so the trend, first thing we look out for is the trend. Now this will be on the daily time frame. I don't know what's wrong with my network, so I'll quickly write this again. On the daily time frame. So this is the first thing we want to see, or we want to look out for on the daily time frame, because the daily time frame it's the most powerful time frame for an intraday trader. Yes, for a daily trader. So if you are a daily trader, you must always come to the daily time frame and look for your buyers. So the second thing we will be looking out for is the breakout here on the 4 hour time frame. So we'll be looking at a breakout on the 4 hour time frame to confirm our daily bias. Yes, so breakout on the our 4 time frame. So this is what we will be looking at on the hour 4 time frame, and our entry time frame is either on the hour 1 time frame or the 15 minutes time frame. I really love to use the 15 minutes. So entry on the hour 1 or the minute 15 time frame. Is as so simple as that. Now the entry model which I'm using is the advanced SMC entry model, which is we have the breakouts. Okay, let's say something like this: price going up. Okay, let's say price went up, give us a breakout. What's this? And it comes back, give us an inducement then went up back again, taking liquidity from this low, tapping into our key level before coming to the downside. Now this is my entry model. I use this little guy here as a fake out all my liquidity markup or liquidity zone. Then I take a trade on the nearest key level above or below my inducement and take it down to the nearest low or the internal external liquidity. So let's quickly go and let me explain this very well for you, so you know. The first thing you want to look out for, first of all, is our trend on the daily time frame, and also the breakout on the 4-hour, and our entry on the 15 minutes or the our 1 hour time frame. So also, we don't forget that we'll be using the alchemy strategy, which is the combination of CRT, Mauritian support resistance, and advanced smart money concept here to build our buyers. So first of all, what we will be doing is the trend. So what you see here is, you see this lower high, lower low, this lower low here, right here. Price can come back and give us a push before coming to the downside, but it went all back there, filling this fair value gap and give us another lower high. You can see very clearly that there is a fair value gap right above this guy right here, which got feed, and this other guy was being taken out. As you can see, it was being feed, and this candle was being used as a liquidity for price. Now the first trade I took, this is how I build the logic. When I said my advanced SMC is price, it will be going and just take liquidity, come down, give us inducement, then went up back, take liquidity before coming to the downside. Now this was the same strategy, this was the same entry or structure price give. This was the same structure price give. I'm coming, let me do something. This thing is okay. So this was the same structure price give, where it went back up, taking liquidity and filling this fair value gap here. It took liquidity from this candlestick right here and gave a break of structure. You get? So now it now went up. This was the highest point it came to, but it did not medicate any key level. Now where is our key level? This we have this key level right here, this key level right here, and we also have this key level right here. I've not even went to the lower time frame yet, but just this simple tips, this simple SMC structure have already given me enough opportunity. No need to stress myself, complicating things. So price gave an inducement, it came down and it rejected, gave a rejection candle, and this huge push up there, come back to medicate the candle before giving us this down move. Now this was the liquidity, and where is the nearest key level? That is above this inducement. This was the key level. It's just as simple as that. So very simple. You just need to understand how advanced SMC structure work. So this is just target. This was a nice 1:3. I think it was a 1:4. I still remember. Okay. So you see, this was a nice one. We didn't even bother to go to the lower time frame and start stressing ourselves on the structure down there. So this was not actually the move that I actually take. So I will explain the next one for you, which is the second trade. Now remember we say we identify the trend on the daily time frame, or we want to see a rejection also, or a CRT candle. So this was the CRT candle I saw. This candle caught my interest after price gave this, after this candlestick, a little rejection from this candle, and price gave a CRT candle right here. As you can see, this was a CRT candle, liquidity sweep, and price still closed below this candlestick. After this candle, after this quick, price come back and close. Now this CRT candle was actually rejecting from this key level, which I've marked already, this green line. This was the key level right here, the previous key level that liquidity was being taken from. Yeah, so it was disrespected before, but price later come down. So there was a key level, price actually respected. So we have our CRT candle. What should we be looking 4. We go to the our 4 time frame and look for our breakout. Now one trick I'll tell you guys is, before going to your lower time frame and look for breakouts, to avoid I'll say confusion, there's one trick. You have to put on I'll say line 2, which is, I normally use this line 2 right here. I'll just put the 2 right on the rejection candle, put it straight like this before going to our 4 time frame. So we got our trend on the daily time frame and we got our CRT candle, so down to the 4-hour time frame. Now this was the first candle that we no longer to look at this past prior action. We already got our key level, so we should be focusing on our key level. So this was our first rejection, our first candle that touched the key level right there. So where is our breakout? This was our breakout. This is our breakout in a SMC. I use this as a breakout, and on the line chart, when structure is actually confusing, sometimes I use the line chart, and we got a breakout from here. Because it was this was our previous higher low, then higher high, and price gave us a change of character, also known as breakout. So I'll be using the SMC breakout because it's so clear. Now this was a breakout. We already know we have a breakout right here, and we will be going to our 1 time frame to look for entry. Now this is so simple. If you are smart, you already know this key level. You already see the key level right here. You already see one key level right here and another key level right here. But because we are using the advanced SMC for our entry, where is it? Advanced SMC for our entry, sometimes we do miss it on the 4-hour time frame, because sometimes 4-hour time frame is a bit straightforward, and sometimes it can give us, it don't I'll say to it don't really give us that structure early enough. Yeah, it takes time. So we are intraday traders, so we use the lower time frame for it. So coming to the 1-hour time frame for our entry, as you can see, we have a key level right here. You have a nice key level. Now let me mark this up right here. Now you will be so surprised. Sometimes if I'm having a lot of key level, now let's see something. We have a key level right here. You have a key level right here. This is something most of us really are confused about. You also have a key level right here. You have a key level right here, and we also have a key level right here. These are resistance level right here, and we have the extreme key level right here. So let's remove this. So you can see a lot of key levels right here. This is where our advanced SMC structure comes in, like I said. So I'll quickly clean all of this. So as I've marked all my key levels. Sometimes I don't mark my key level because it make my chart look messy. So I'll just wait before I see my entry model, then I target the nearest key level above or below the inducement. So now price have given us a breakout. This was our breakout right here, and price started to pull back. Price started pulling back, giving us higher highs, higher low, higher highs, higher low, higher highs, higher low, and higher highs. Then it started consolidating. Now this really caught my interest, and I was like, okay, something is fishy. Now once again, the structure is not clear. Then I jump to the 15 minutes. Now sometimes if price is actually if price have gotten to a stage that is aligning with the trend, you see it consolidating. This is one trick I'm telling you. Price will consolidating. Just know that the next thing price will do is to fall, because it is aligning with the trend, and sometimes you don't give clear structure. The only way for it to do is to consolidate and just give a push down to its intended direction, or according to the trend that it is aligning to. So structure is not clear for me. You go to the 15 minutes, which is my lowest entry time frame. Now this is something you have to see. We got this higher low higher high. Now price started consolidating. This was where I was really paying attention to. Now this was, if you look at it, where price is at, because sometimes once price consolidates, it's going to give false breakout if you have known it already, or if you have already been advanced to it already. This was after this I'll say, let me mark this complete consolidation. This was the highest points I mark. So this was the highest point, and I'll show you something. So this was the whole consolidation. Let me reduce it. So this was the consolidation, because this was our last low and high. Then price started giving us the bounce. Then finally it broke out. It gave a false broke out. You see, now where does it broke out actually medicate? This was the zone. Now it's like this was the zone price really went to. After I marked this my inducement, because I knew price is going to give a breakout after this consolidation. This was the high, the low, and this was the last high before price started consolidating. Definitely I knew this high is going to be used as our inducement, or the liquidity. Now let me remove this box right here. So I mark out the liquidity, I mark out my inducement, and now if you look at the 15 minutes, the nearest key level we have in here was this key level. This was the key level price was actually at. If you look at it very well, you can also see the A-shaped key level. As you can see, it is a nice A-shaped key level. Now this was not actually it didn't give me enough courage to pick this key level. Then I went to the 1 hour time frame again. After marking this key level, I went to the 1 hour time frame again to get a clear confirmation that if this key level is actually strong. Come on, network is actually disturbing. I can clearly see that my entry was at the top of this key level also. If you look at it, after price was coming from this 4 hour daily time frame key level. We saw this high and we saw this low. The price went there tapping into our key level before the push. Price never come back to medicate the zone after this breakout. It just gave this breakout. Now it is coming back to medicate it. So I just like, okay, fine, my key level is around this area right here, so I just shift it right here to avoid a missed trade. Because I didn't want to miss this opportunity. So as you can see, our liquidity was still below our inducement. Is clearly, as you can see, it is below our A-shaped key level on the 1 hour. So this was where I just put my entry. I just put my entry right here on the 1 hour time frame, and I just put it above. So I like moving my stop loss. Though I love stop loss, I love wide stop loss, because we want the market to prove me very, very, very wrong, in order to make me know that, okay, this analysis is wrong. So this was where I target my this was the external liquidity. Though so this was where I targeted. So you can see it is the nearest key level price gave an inducement. This was my actually target, because if you always come to it, will always give you confusion, because there are a lot of key levels. We have on my next video, I will explain our key level, or I will give the type of key level. So we have different key level. We have the OC key level right here, open close. We have the A-shaped key level, which was my entry. We also have the extreme A-shaped key level. So all this was a continuation A-shaped key level. So there's a lot of key levels. So we just have to use this the advanced SMC structure or entry model, where price refused to tap into a particular key level, gave a push down, inducing, or I'll say, like, if it is a sell signal, it will like make the newbies quickly enter for the trade, and price will later go up there, sweeping, taking on their stop loss. Most importantly, tapping into the unmedicated key level and come down immediately with a huge momentum. So my screen record got ended, and I'm sorry for that. So if this video is helpful, please do well to like, subscribe, and comment on what difficulties you are having on this particular strategy, so I can be able to do a video concerning it. Though I'm not a master of it yet, but I do practice them a lot, and I'm trying to be consistent with what I've just taught you guys. I'm trying to be consistent as possible, and this is, as you can see, it works for me. And if you treat it the way I treat it also, you can also become I'll say profitable from it. So thank you once again. Thank you very much.